Hey everyone, welcome back to Corporate Decoder, where we try to make sense of the confusing world of corporate finance. And today we've got a filing that is all about a company saying, oops, we messed up our old numbers. Now this is a Form 8K filing from EON Resources Incorporated, and it is essentially a public announcement that they have to take back something they said before. Specifically, they are telling everyone that some of their previously issued financial statements just can't be trusted anymore. This is happening because the Securities and Exchange Commission, or CSE as it's commonly known, sent them some questions about how they counted things in their past reports. The main issue here is to do with something called non-controlling interest, which sounds complicated, but basically means a stake in a part of the company owned by someone else. The company initially thought these other owners did not have any real say or economic rights in the company's losses, so they did not include them in the accounting for those losses. But the SEC staff disagreed, and after a lot of back and forth, EON Resources has decided to go back and redo the accounting. So, what does this mean for the actual money going in and out of the company? According to this report, it should not change the total income or loss the company has experienced. What it will do is reallocate those past losses. Some of those losses that were originally assigned to the company's shareholders will now be assigned to this non-controlling interest. This means that for shareholders, the reported losses for past years will look smaller. For instance, in 2023, they originally reported a loss of about $9 million. After this adjustment, they expect that loss to be reduced to around $6.7 million. Similarly, for 2024, an annual loss of $9.1 million is expected to shrink to about $7.5 million. The company also mentions that this change is not going to affect any future financial results. It is purely about looking back and correcting how past numbers were reported. They are promising to file an amended report for 2024 to show these corrected figures. This whole process is non-cash, meaning no actual money is changing hands because of these adjustments. It's all about how they account for things on paper. They also state that this preliminary information is still subject to final checks and audits. Now, let's talk about the securities being traded. EON Resources has Class of Common stock trading under the ticker symbol EONR. They also have redeemable warrants, which are basically options to buy more stock trading under EONRWS. The company is also flagged as an emerging growth company. This usually means they are a younger company that is subject to fewer regulatory requirements compared to larger, more established companies. This can give them some flexibility, but it also means they might be more prone to these kinds of accounting adjustments as they build their financial reporting systems. So, what is our take on all of this? It is a bit of a mixed bag. On one hand, it is good that the company is being transparent about having to correct its past financial statements, especially after feedback from the SEC. It shows they are willing to fix errors. However, having to restate financial results, even if it does not impact cash flows, can erode investor confidence. It raises questions about the initial accuracy of their financial reporting and internal controls. The fact that the overall income or loss isn't changing is a positive sign, as it suggests the underlying business performance hasn't been misrepresented, just the allocation of that performance. But investors will surely be scrutinizing how diligently these corrections are made and what it means for the reliability of future reports. Looking ahead, EON Resources needs to demonstrate a robust and accurate financial reporting process moving forward. Investors will be watching for any further issues or any additional restatements. The market does not like uncertainty, and this kind of announcement, while necessary, adds a layer of it. The company itself acknowledges there are risks and uncertainties, which is standard practice. For investors, the key now is to see the amended filings and understand the full impact, even if it is just on paper. The reduction in reported losses for shareholders is a positive spin, but it stems from an accounting correction, not an improvement in operational earnings. In conclusion, EON Resources is cleaning up its accounting books. While the financial impact appears limited to historical reporting, the reputational impact of having to restate financials is something that will be closely watched. It is a reminder that even seemingly small accounting decisions can have significant implications when it comes to corporate reporting. That is our breakdown of EON Resources Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think this will affect investor confidence? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and be sure to subscribe for more deep dives into corporate filings. And if you want to join the conversation and connect with other viewers, check out our Discord community linked in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.